In finance, there's nothing scarier than a secret. When markets don't know the truth, they start to imagine the worst, and that's when panic begins to set in. My name's Ted Maselesele, and today on The Credit Narrative, we're looking at why the open book is the best defense against a financial crisis, and how transparency is the secret ingredient to keeping African markets steady when the world gets rocky. Have you ever been in a dark room and heard a strange noise? Your mind immediately goes to the scariest possibility. But the moment you flip the light on, it's just a cat knocking over a lamp. Global financial markets work the exact same way. When a country is opaque, meaning it doesn't share its debt levels, its reserves, or its growth plans, investors get nervous. And nervous investors are twitchy. At the first sign of trouble, they don't ask any questions, they just sell. This is how a small problem turns into a market panic. Credit ratings are the light switch. Their job is to bridge the information gap. By forcing governments to publish their data and their risks, the agencies ensures that there aren't any skeletons in the closet. In the past, some argued that keeping secrets protected a country's sovereignty. But in recent times, we've learned that the opposite is true. Transparency actually acts like an economic armor. When a country like Mauritius or Botswana is an open book, a global shock might cause a dip, but it won't cause a collapse. Why? Because the investors already knew the risks. There was no surprise to trigger a panic. This is why new mechanisms like the African Peer Review Mechanism are so important. We are starting to hold ourselves to higher standards of disclosure, because when we tell our own story, we take the power away from rumors. We prove that Africa isn't a scary dark room, but a marketplace that is ready for the light.